Scott. Thanks so much for allowing me to be part of the podcast.
Most people speak on their throat.
I think you'd be a superstar in the banking industry.
We have not seen any dead bodies in the dumpster.
Tell us one of the dumbest, stupidest things you've ever done in your business career.
You have entered the world of accounting, the place where business dreams and financial reality collide into exciting things like journal entries, debits and credits, and financial statements. Everyday CPA podcasts, helping you and your business better compete, succeed, and win.
This is part 2 of a 2-part series.
Good morning. This is Kelly Coughlin, CEO of Bank Bosun. Hope everybody's doing well. You know, dealing with the IRS for a business or personal tax resolution can be a challenging endeavor. Today we're going to talk about business tax resolution. We're going to focus on tax liability resolution. That is, the resolution of a business tax liability after the IRS has notified you of an amount due. With that, I have on the line William D. McConaughey. He's a former IRS revenue agent, beware, and has a master's in taxation and is a CPA. So he's got insider knowledge about how the IRS personnel think or don't think, what pressures they're under, and how to work with them successfully. So I think, Bill, you're on the line. Let's talk about business liability, tax liability. I like things in 3s and 5s. So let's talk about the top 5 tax liability categories that you end up working on for businesses, or the events that created it. Is it, you know, the long-term capital gains and they got this big tax liability? Is it an audit? I assume that employment tax withholding for compensation, that's one of those things that you can't do too much with, I would imagine, because that's one of the most egregious events, right, that's created. But give me like top 5 things that you work on for businesses.
For businesses, I'm not sure there's 5, but there's at least a couple. First and foremost, far and away, the number one problem is our employment taxes, payroll taxes, where the business owner or the business doesn't turn over withheld payroll taxes to the IRS like they're supposed to. That comes up frequently. And the reason, again, is that there's usually a good reason for it, where the business needs that money to take care of unexpected things that come up, either within the business or the business owner personally. It's unpaid payroll taxes that the company withholds from the employees' wages. They're supposed to turn it over to the government, and they don't for various reasons. That's number one, far and away. Number 2 would be the income taxes, company income taxes. But by and large, it's almost always the payroll taxes. That's the troublesome thing. And the reason being is because it's so easy. I mean, the company's supposed to turn those over every 3 months because they're quarterly filing requirements. And it's very easy because there's nobody there to stop the company or the company owner from just saying to themselves, you know, I need this money right now for other purposes, and that's what they do with it. So that's it. I wouldn't say there's 5, but there's certainly the payroll taxes and the income taxes, but payroll far and away is the bigger problem of the 2.
Okay. On the payroll side, let's focus on that one then. Many companies outsource payroll to like QuickBooks, ADP, you know, a handful of companies that do payroll processing. I know when I was the CEO of a company, we didn't even see the payroll taxes. We outsourced the entire service. I never wanted to see that money. Just make sure it gets deposited. Then it got me concerned. I think there were a couple cases I had read about where even if you're using an outside service, you better make sure that outside service has sent those withholdings onto the IRS, or they're going to come back and look at you. Is that a fair statement?
That's absolutely fair. With the payroll services, and as you were mentioning, there's large ones that are nationwide, and they do a pretty good job of it. I use Paychex, one of the 2 of the largest. they do a pretty good job of it, but even they can make honest mistakes. So it's still, your responsibility to make sure that those payroll taxes are going in like they're supposed to. And then there's smaller payroll processing companies that are not so stable or not so honest, where there's been cases where some of the smaller companies will embezzle your payroll taxes, and you're thinking you're paying the IRS, and what you're actually paying is somebody who plans on running off with your money. That can happen. That does happen. So, yeah, as you were saying, it's incumbent upon the business owner to make sure those taxes are deposited with the IRS, because you, the business owner, you are responsible, whether you farm it out to somebody else or not. That's not the point with the IRS. The point with them is that you are the person who's responsible for that, and if it doesn't happen, the IRS is going to make you personally responsible for that. They will, the IRS, they will personally assess half of the payroll taxes that were not paid by the company against you personally. So that's how that works, and it's, like I said, it's one of the biggest problems out there, and it brings me a lot of business. This comes up all the time.
So that personal liability of the corporate veil, so to speak, payroll taxes pierce that for all officers, CEO, CFO. How deep does it go?
Anybody who has any sort of responsibility for that to happen, and it can go deep, though. I've seen cases where the IRS will even go down to the bookkeeper or accountant who's not even an owner of the business. They just work there, but because they had their hands on the checkbook, they were supposed to write the checks. They did write the checks. The IRS can go all the way down into people who are not even owners, people who just work there.
Yeah, I remember when after I had read this, I was CEO of the company, and I'm a CPA as well, so I'm kind of, sensitive to that kind of stuff. And so I remember, I think we were actually using paychecks at the time, and I remember it caused me to do further due diligence on paychecks to make sure that they were, in fact, sending those funds along. And I think it was kind of a challenge to get that information to prove that the deposits had actually been made. Is there any ideas that you have on how one can get that?
Well, yeah, you'd have to contact Paychecks and get proof of that. I see it on bank statements where they're charging me for the deposit. Paychecks, they take the money directly out of my bank account, so that's how I know it's being done.
Well, you don't know that it's going to the Treasury, though.
Well, I will know. Yeah, you got a point there, actually. I will know once the IRS sends me a notice saying that I have unpaid taxes, and if that ever comes in, I'll say, well, that should not be happening.
Yeah, see, that was my problem, is I certainly saw them withhold it, but were they depositing it into another account or the Treasury's account? And I never could, as I recall, I mean, it's been years, but I recall it was a challenge to get to verify that. But your point is that it needs to be verified, because that's the number one, whether it's accidentally or intentional, these employment tax liability, the failures to make those deposits is the number one driver of demand for your business model, correct?
Right. That's the number one thing from businesses that bring me tax liability cases where these payroll taxes don't get paid like they're supposed to. And also, to follow up on your question about how can you know that they're making those deposits, what you can do is pull up account transcripts from the IRS online for any particular quarter, and you'll get a printout that shows what's happened there, whether or not the payroll taxes were deposited. So you can verify that, and it's not actually that hard to do. If you go online at the irs.gov, pull up your account transcript for any particular quarter or year, and then you'll see what's there.
That's probably not a bad idea to do then, is it?
Yeah, if you want to stay on top of it, and if you have any reason to believe it's not happening like it should, that would be the best way to verify it without having to take anybody else's word for it.
Yeah, at least have your bookkeeper or controller or somebody just once a quarter or once every 6 months or at least once a year go in and do that. So that's what drives your business model. Well, that covers what I had. Anything else you wanted to add to this?
Closing, I can't overemphasize the importance of those payroll taxes. Again, that is such a big deal on these business taxes that when the IRS again goes and assesses those taxes against the owner of the business or the bookkeeper that works there, the so-called trust fund recovery penalty. That's what they call it. That is a real big deal. The IRS takes those payroll taxes very seriously. The way they look at it, they don't look at it as an unpaid tax liability. IRS people call that theft because what you have done as a business owner or somebody that works there and didn't turn those payroll taxes over, those monies, those taxes, that was not your money. That was your employee's money. That was money that was out of your employee's paycheck. Never belonged to you, and you're put in a position of trust to turn it over to the government. And if you don't do it the way the IRS sees it, what you've done is tantamount to theft. You've taken somebody else's money that you were supposed to hand over to the government, and you didn't do it. So the way they look at it, they call it theft, very thinly disguised theft, and that's why they come down real hard on unpaid payroll tax liabilities. I can't overemphasize just how important that is. And if you're in that situation, for whatever reason, you'd be well advised to get professional representation because the IRS is going to come down on you like you wouldn't believe about that.
Now, does that apply to if the employer is withholding 401k contributions? Would they treat that the same way? If to make sure that the funds have been deposited into their 401k plan?
Oh, that's not the IRS's business where that goes to the 401k plan. That's another matter. The IRS doesn't monitor or audit that. They're looking for the payroll taxes, not the 401k contributions.
Okay, so Department of Labor, I suppose, would be on top of that if for some reason the employer was withholding the wages for a 401k contribution and it wasn't going into the 401k plan, then you're saying the IRS wouldn't be looking at that, but another regulator like DOL probably would. Is that right?
Yeah, that's right. Yeah, that's not for the IRS.
Okay. On the issue resolution, since it is such a kind of cut and dried fact and circumstance, how can you get favorable resolution on this? If they stole $10,000 from their employees, how do you add value to that? Just reduction in penalty?
I'm not sure I understand the question there, Kelly. Rephrase that. What do you mean?
So the question is, if it's equivalent to theft of employees $10,000, that the employer doesn't make the contribution, so the IRS says, hey, this is de facto theft. Let's say it's $10,000. How do you add value to that? Because if they're just saying, hey, this is theft, then how does McConnaughy come in and say, well, let's settle on $5,000?
Well, that would depend on the company's ability to repay those taxes. I get settlements all the time on unpaid payroll taxes. These cases, even though they are quite serious, I get settlements all the time. There's a misunderstanding out in the general public that you can't settle payroll taxes, but that's absolutely untrue. I get settlements frequently on unpaid payroll taxes, even though the IRS profoundly frowns on those unpaid payroll taxes. They can be settled if you can prove to the IRS that the business doesn't have the means to pay those off ever. Then yeah, you can get reduced settlements even on unpaid payroll taxes, both at the company level and at the responsible person's level. I do it, like I said, frequently. I said all the time, but it's not every day, but it is frequently, and that's at least every month. I get settlements on those kinds of taxes, despite the misunderstanding on the public that you can't settle those. Those kinds of taxes cannot be discharged in a bankruptcy, which is where I think the misunderstanding comes in, because you can't discharge those kinds of taxes in a bankruptcy filing. They can't be settled, but that's not true. They can be settled with the kind of work that I do.
Yeah, I guess I didn't realize that. I kind of assumed that the payroll tax part there's not much room for negotiation there. But
no, that's absolutely untrue. I get settlements frequently on those taxes. They can't.
Yeah,
be settled.
well, that's terrific.
They can't be discharged in a bankruptcy. That's where a lot of people get the misunderstanding.
Yeah. Let's talk about how people can contact you. I think there's no geographical limitation on where you work. I mean, if it's a state tax issue, then California, I suppose, maybe Arizona, is your sweet spot. But in terms of federal tax issue, you can work with anybody anywhere, correct?
That's correct. I have clients literally worldwide, people that are overseas.
How does one get a hold of you?
The best way is to either call, and I have a toll-free number. It's 888-225-1272, toll-free. You can call me on my dime, 888-225-1272, or they can go through my website, taxhelp.pro, and you can get a hold of me through the website. Either click to call, email. We have chat on most of the time. Any one of those three ways. Call, chat, email, whatever works for you.
Now, do people normally start with you, or do they start with one of your assistants to kind of do some fact-finding first? How does the process begin?
The first point of contact is usually I have a brother that works with me in the business. His name's Donald. He does the initial screening. So usually the first contact will be with him to determine whether or not you really have a problem that I can help you out with. But then immediately after that, it comes directly to me. I am the man. I'm the point of contact after that. I will be personally working your case. It will not be shoved down to somebody else with less experience. So the McConaughey brothers, the McConaughey mafia doing tax work for you. That's true. All right. So state your website again. It's taxhelp.pro.
Taxhelp.pro. Okay.
Right.
All right. That's terrific. You want to finish with a quote or a funny historical event, or are we done?
Oh, let's see. I think we're done for now.
That's good.
This has been a great call, and I really enjoyed it. Any other time you want to speak with me about this tax stuff, please let me know. I'll be glad to get on the horn with you.
Well, let's do a personal one, personal tax situation, because those are different, because obviously you don't have the wages thing. So at least the top critical event would be different. But we'll set that up and try to get that done before the end of the year as people get into the tax season. That would be great.
All right. Very good. I'm looking forward to it.
Bill, enjoyed it. Take care of yourself.
Okay. Goodbye, Kelly.
Thanks. Bye.
Thank you so much, Kelly, for having me. I really appreciate it.
Kelly, thank you very much.
Thank you, Kelly. We'll talk soon.
Thanks for tuning in to the Everyday CPA podcast. We will see you next time.